We're on the hunt for $1 million, and today we're breaking down Render, one of the biggest AI and GPU infrastructure plays in crypto. In this video, you'll learn what Render actually does, why Apple, Stability AI, and Hollywood-level studios are using its tech, and how its tokenomics and the Solana move set it apart from other AI coins. Stick around until the end, because we'll run 3 price scenarios and calculate exactly how many Render tokens you would need in each one to reach the target of a $1 million portfolio. And if you find this interesting and you're not following the channel yet, hit that subscribe button so you don't miss the next Millionaire math breakdown. Let's get into Render. This is not a financial advice, always do your own research. Render is one of the main AI and GPU infrastructure plays in crypto right now. It launched in 2017, conceived by Jules Urbach, founder and CEO of Otoy, a company that's been pushing GPU rendering boundaries since 2009. The Render network held its first public token sale in October 2017 at a valuation of $133 million, followed by private sales through January 2018. After extensive beta testing with artists and node operators, Render officially launched to the public in April 27, 2020. The mission is simple: democratize access to GPU computing power by connecting artists needing intensive 3D and AI rendering with node operators who have idle GPUs at home or possibly even in data centers. Think of it as Airbnb for GPU power, but instead of empty rooms, you're renting out unused graphics cards. Render initially launched as an ERC20 token on Ethereum, but in 2023, they migrated to Solana for faster transaction speeds and lower fees. That was a massive upgrade, joining other leading decentralized physical infrastructure projects. Quick but important detail here. RNDR was the original ERC20 token on Ethereum, and the project later rebranded to Render during its migration to Solana. So if you still hold RNDR in a self-custody wallet, don't worry, you can swap it to Render anytime using the official upgrade portal. Diving into the tokenomics of Render now. It currently has around 518 million tokens circulating, approximately 533 million total supply as of today, and a maximum cap of roughly 644 million tokens. That kind of supply of a few hundred million tokens sits comfortably between low supply scarcity coins and high supply meme tokens, and that provides reasonable liquidity without excessive dilution. The original token distribution from back in 2017-18 allocated 25% to public-private sales, 10% to the Render reserve, and 65% held in escrow for network operations. However, the 2023 implementation of burn and mint equilibrium fundamentally changed how supply works. That ultimately renders those static percentages less relevant today. Here's how BME works. A couple of years ago, the community voted to implement a new tokenomics model and added a 20% inflation pool, that's about 107 million tokens, to the original 536 million cap. That's how we arrived at the current 644 million maximum. Under this system, creators pay for rendering in fiat equivalent render. 95% gets permanently burned and 5% goes to the foundation. Meanwhile, node operators earn from freshly minted tokens distributed on the following declining emission schedule: 9.1 million render in year 1, 5.9 million in year 2, and from then on it decreases after each year. But what does this mean? Well, high rendering demand burns more tokens than get minted. That's deflationary. On the flip side, low demand means minting outpaces burns, i.e. inflation. So token scarcity depends entirely on whether people actually use the network for GPU compute and not just on speculation. After we've covered the tokenomics, I want to draw your attention to the network performance of Render and also their ecosystem growth, because they're quite remarkable. Render is processing real workloads today, with tens of millions of frames rendered and ongoing mints and burns visible on the public dashboard. Creators use it for 3D animation, high-end visual effects, gaming assets, VR content, architectural visualization, and also increasingly for AI model training and inference. On the partnership side, Octane X, powered by Render, was featured in Apple's 2024 iPad Pro keynote and that put Render's tech in front of millions of creative professionals on Apple hardware. In March 2024, Otoy, Stability AI, Endeavor, and the Render Network announced a joint initiative to build open, transparent, generative AI workflows on Render's decentralized GPU infrastructure. The target is clear: Hollywood-grade media and next-gen AI tools. The network is also expanding beyond just rendering. Recent governance work like RNP 021 focuses on broadening from pure frame rendering into more general AI and compute workloads. See, that makes Render look less like a niche tool and more like a full compute marketplace over time. On their website, stats.render foundation, the dashboard logs mints, burns, and rewards on roughly weekly epochs, so anyone can verify that jobs are being paid for and that burn events are occurring. Here's the stat that matters to me. The network has already processed over 50 million frames, and those numbers keep climbing on the official Render dashboard. Every one of those frames triggers burn and reward events under the burn and mint equilibrium model, so you can literally watch real usage turning into on-chain burns and node income in almost real time. If those usage metrics and burn totals keep trending higher, that's strong evidence that Render is backing real demand for GPU power, and it's not just a price narrative. Now, onto the typically very contentious front: decentralization and other major risk factors. On the decentralization side, Render operates on two layers. First, you have the GPU node operators distributed around the world providing hardware to the network. And second, you have the governance and emissions parameters that go through the foundation and community-driven Render network proposals, RNPs in short. That is the same process that approved the move to Solana and the details of BME. It's not a classic layer 1 validator set, but the idea is that both infrastructure and rules are not locked in a single company's hands. In terms of ownership, you should be aware that the foundation, team, and early backers still control a meaningful chunk, on top of whatever is sitting in big exchange wallets. That means unlocks, treasury decisions, or a whale selling can move the price, even though more than 500 million tokens are already out in the wild. And there are other real risks too. Regulation could hit infrastructure tokens, Solana could have outages, or a rival AI or compute network could offer cheaper, more reliable GPU power. Plus, you're competing with traditional giants like AWS, Nvidia's ecosystem, and a wave of new AI tokens, so this is not a guaranteed win, as nothing really is. Let's try to do a quick competitors comparison now. So, is Render just another AI or GPU token? Not really. Other DeepIn and compute projects like IO.net, Nosana, Akash Network, Aether, and more mostly focus on general cloud-style compute or AI inference. Render's edge is that it has been embedded for years in actual 3D and media pipelines through Octane, film VFX, VR, and high-end creative studios. The project is now expanding that same infrastructure into AI and broader compute. So while the rest of the field is racing to sign their first big workloads, Render is trying to scale a stack that Hollywood and serious creators already know and use. Now, the part you actually came here for. How many Render would you need to hit a $1 million portfolio, and what does that imply? Historically, Render's all-time high was around $13.6 in the 2024 AI run, and it's seen brutal drawdowns in bear markets, down to just a few cents in the early days. It's a classic crypto roller coaster. Massive upside when you buy at the lows, and of course, massive pain if you buy at the top. And the great thing right now is that we are at the lows, with the price being around $1.6, making up a market cap of just over $860 million. We've waited long enough, so it's time we looked at the three scenarios in which we can retire as millionaires from Render. First is the bear case scenario. If Render goes back to $6, the market cap would be at around $3 billion. That would give us an almost 4x on our money right now. And to reach that coveted $1 million, we would have to get 166,000 tokens now. That would be an investment of $266,000. Next one is the base case, a bit more optimistic. This is if render goes back to the previous all-time high and even reaches a new one at, say, $14. The market cap then would be at around $7.5 billion. That would translate to almost 9x return on our investment if we were to buy 71,500 tokens at the cost of $114,000 today. Saving the best for last, the bull case is upon us. So here it is. Render hits $30 in the next few years. It will bring us to $16 billion market cap and the astonishing near 19x gain. To reach the goal of $1 million down the line, we would have to get 33,000 tokens, setting us back $53,000 at today's prices. It's time to pay attention to the institutional drivers of growth. One part of that is certainly the major exchanges that offer trading of the Render token. These include Binance, Coinbase, Kraken, and CoinEx. And in case you're wondering which platform to choose to buy Render on, here's my suggestion for you. Check out CoinEx, trade the token there, and get a $25 gift from the link in the description below. CoinEx is a proper crypto exchange with almost 10 years of experience, where you can buy Render or any of the other 1,000 tokens on spot. In case you're feeling more adventurous, you can go for leveraged longs and shorts. The platform is very easy to use, so go register to CoinEx from the link in the description, get trading, and get the $25 for free now. Aside from the major exchanges and the ease of trading, another important thing, Grayscale has included Render in their decentralized AI fund with a near 18% allocation. That's institutional money backing real infrastructure right there. Even Multi-Coin Capital, one of the most respected crypto VCs, has been the lead investor in Render. What matters is that Render is solving a big problem, and it sits in the middle of two of the strongest narratives in crypto right now. DePIN, that's decentralized physical infrastructure, and AI infrastructure, which a lot of analysts see as high conviction themes for this cycle. I tend to agree, and that's why I gave you this Render breakdown today. Now, if you enjoyed it, please do me a favor. Give this video the thumbs up, subscribe to the airdrops.com channel, and share this with a friend who's also hunting for that millionaire from crypto plan. Drop your Render price target in the comments and tell me which coin you want me to run the millionaire math on next. Thanks for watching, and I'll see you next time. Ciao.